dude. I just don't know. I said, dude, I did warn you.
That's how I broke Ronald coming at me like that. He tried to pick me up and throw me on the bed and had a hold of the two door frames. I said, I don't fucking think so. He got too close to me that time. I was like, wham! I broke his nose. And he hasn't came near me like that in 3 years.
I just
His
don't.
arms just dropped. He looked like
Honestly, though, for me
he
personally,
was looking for the
I
couch
just
to
don't
sit down and
understand.
stuff.
I just don't.
Yeah.
My thing is I just don't understand why I didn't have the balls when I was making my first one to stand up for myself.
I don't understand it either because my first husband put me through sheetrock walls.
Yeah.
I had
He
6
broke my leg,
DNC
broke my
laparoscopies,
ribs
and
over and
orthopedics.
over.
Yeah, so
But when it's a new experience when it's
you finally showed up.
yeah. When it's a new experience, sometimes you don't know how to
Well, it
how
was
to
also,
deal
it
with
was,
it.
It was also, it was not just physical abuse.
Right.
It was everything.
yeah,
Sexual,
the
Mental.
too.
Right.
everything.
Me too.
Emotional, all of it. So, yeah, I mean, I was beat down for a little. I didn't think I could be by myself.
That
And my
was
friend
me
finally,
too.
it was Jim actually. Jim goes, "Are you done? I'll help you get an apartment. Are you done?" I said, "Okay."
Is
Yeah.
he still single?
Who?
Your computer guy.
Jim.
He is single. No, he's married.
Oh, really?
Yeah. You wish.
Yeah. No, I like his personality too.
Oh,
Like,
he's full. He's full Italian.
He's definitely not a normal guy we find around
He
here.
would tell you stories.
Next week's our last week, right?
Okay, so you're from Wichita. Do you remember when we used to have the hot dog stands outside the courthouse?
Yeah.
Years. That was his dad.
Oh, that's cool.
And they were New York hot dogs because his dad was from New York. His family's from Italy, but his dad was from New York.
Last hot dog I had was at the
So we got one last week left.
downtown.
Next week.
What's
Yeah,
that
but we're
place
not gonna
called
let
where
you
the
come
ice
in.
hockey's at?
Yay!
It's $9.50
We
for
decided
a
we're
hot
going
dog.
to be yeah, I know, that's ridiculous. No, but he's got some really interesting stories.
Oh, I bet.
Because he used to be,
They probably had mafia
the-
ties that far.
oh yeah, he scared the crap out of me the first time I met him because he was a lot bigger. And he came walking up on me, hi. He's like, okay, can you put out me dead? I was like, yeah, I mean, he did, he freaked me out.
Like
But he took
Anthony
right
Abbott
to
and
me.
Marco walking up on you talking about who?
He took right to him, but it was a church too, so yeah, a little less intimidating.
Less weird.
Church and I don't get along. I don't like being.
But anyway,
I'll
he
burn
will tell you
this fucker
stories
down.
about when he was a I don't know if you want to call it a roadie or what. Oh, shut up, Sean. I'm getting a chance for I don't know.
She won't show up until 10 o'clock.
I know.
Well, see, she's got till 10 o'clock to finish her story.
But he used to do bands like Boston and he would set up their systems and their sound systems and stuff.
Oh,
He
okay.
was on the road all the time.
I told Brett
I
Heinkel.
was like, dude, that's
That is.
He's always been in the high tech stuff.
All right, you may proceed.
Well, gee, thank you.
I gotta go to the Blackbird anyway. Did she say 8 and up or 9 and up? Joe last night for chapters for Linda. Did she say
Well-
chapter 8 and up or 9 and up?
I thought she said 8.
Eight,
But
okay.
make sure you go through these.
These first, yeah, I will.
Because I should have extras of almost everything except for maybe 13. No, 12.
Okay. Well, whatever I don't have,
All right, so chapter 16 today. Yeah. So 4 to go, 2 classes left. Guess what happens next week?
2 chapters each day?
1 o'clock every
I
day.
officially quit.
There was one time last year we didn't get out of here till almost 1:30.
It was, yeah, I remember that.
Well-
It depends on how much Matt talks.
Yeah.
Wednesday,
I'm gonna can I bring in duct tape or is that it?
when, for Wednesday, chapters 19 and 20, those 2 should go really, really super fast because it's all due diligence. and whatnot, and we've been talking about it for the last 7
Right.
weeks.
And the
So
only one that we would really want to work on due diligence really with is you.
Right.
yeah,
I wish we had,
Well, last year we had like 3
Speaking of Brenda, do you know
people.
she called me the other day?
Really?
Yep.
Shocking.
Yes, last year we had 3 people, so that's probably why it went longer.
It does.
It was me, Crystal, and some other.
Yeah.
yeah.
So that tends to.
Right. The more newbies, the more.
Well, yeah. It's just like morning or evening class goes by fast. You know,
Right.
where you guys were here till 11:30. I was done by 7:30 last night.
Right.
That's only because I didn't decide to stay.
Well,
This
Kelly
is true.
can talk too, though.
But the only people are there are Joe and Kelly.
Right.
So
Yeah, if it's all old, if it's all prior year people in class, classes go by so much faster because it's just you remember this, you remember this, you remember this. But when we've got new people that in class that
Right.
have never done this before, it slows down so we can make sure that they are grasping the concepts. So
well, and he also lies. There was one year that we had nothing but returning people, but Matt and Gary.
well,
Oh,
that was different because you had both of us in the same class
Oh, we
for
did
the.
too. It was Gary.
that was
in
your
there
first
last
year meeting Gary, yeah.
Yeah.
Put those two in a class together.
Because Gary has the banking side of all of the stuff that we do.
Well, he was an auditor for Intrust until he retired.
But the bad thing is with Gary and I in the same class, it doesn't matter who pops up with the question. Gary and I tend to feed off of each other. Yes, Gary will start down a hole, and I will. I
He
will.
dives right in after him.
I will dig further and deeper and deeper, and then when I get to my depth, Gary will jump back in and go even deeper and deeper and deeper. And you can see the look on Shane's face going, guys, yes, no, yeah.
No.
Time
you
out.
didn't
We
see
don't
me.
need to know all
Me,
this.
I'm sitting behind y'all going,
We'll never get out of here. Okay, so today, chapter 16, we're going to talk about schedules 1, 2, and 3. Well, it shouldn't.
well,
It may
the
or may
problem
not
is some of this might be changing.
Well, a lot of it's changing.
Exactly. So it's almost
It's almost,
not worth talking about.
well, in some regards, there's a point to that.
Yeah.
So, Schedule 1 talks about additional income and adjustments to income. Schedule 2, additional and other taxes. Schedule 3, additional credits and payments, non-refundable credits. Other payments, other refundable credits. In some way or another, most of the things that we're going to talk about, we've already talked about elsewhere. In this case, what we're talking about is, okay, I filled out this form. Where does it go? It goes to this schedule, and then from that schedule, it'll show up on 1040.
Mm-hmm.
So, remember back when they were saying, oh, yeah, we're going to make taxes so simple, we can put them on a postcard.
This was what?
That would be wrong.
Well, that was always a lie. All they did was take all the stuff off the old 1040 and paste it to the schedules. So what they said was true, that 1 year, it was basically kind of down to that size.
It was down to that size as long as you were single, no kids,
No
had
credit.
a single job.
The 1040
Did-
easy.
Basically, that's what they
That
got
would-
rid of the
that's what it
1040A
amounted to,
and the
yes.
1040 Easy, made it a postcard, and if you were if all you had was a W-2, nothing else, you weren't claiming any other tax credits or anything else, you could fill out that little card, send it in, and you were good. But Lord forbid if you had dependents or you
Qualified
had
for any tax credit
yeah
whatsoever.
you got an interest statement from the bank
Oh, yeah.
or something like that, because now you've got schedules that come into play.
It was never going to work.
Yeah, or here was the, and this, I don't even know why they did this, but when they pared it down, it was after the one major piece of legislation went into effect that technically nullified the postcard, the Affordable Care Act. As soon as they put the Affordable Care Act in, it nullified the postcard because you have to have a Schedule 1 and a Schedule 2 and possibly a Schedule 3 just to file your return if you had the Obamacare.
All right, so our point today is trying to identify the schedules and forms necessary to do the items on schedules 1, 2, and 3. And like we said, we've talked about a number of these, but we'll talk about some new ones here. Additional income items and adjustments to income is basically where we're going to spend where we're going to get most of our information today.
Mm-hmm.
Some other taxes, but these other taxes are oddball things. So we don't spend a lot of time on it because, yeah, there's the household employment credit. It was that envelope. Yes. Well, household employment credit or tax doesn't really apply to anybody that we have here because that's the tax you're paying because you have a butler, a nanny, a maid. Yeah. Schedule 1 is a two-part form used to report both additional income on Part 1 and adjustments to income on Part 2. Any additions to income are totaled and will flow to Form 1040 line 8 before you calculate your total income on line 9. Any adjustments to income are totaled and flow to Form 1040 line 10 to calculate adjusted gross income on line 11.
Mm-hmm.
Adjusted gross income is used for several tax purposes, such as figuring limits on credits. For the most part, it's also the number that basically kind of ends up as your taxable income. Rarely is it different if you're using just straight ordinary income tax. So in the 1040 itself, we're down in this area. At least when we're talking about Schedule 1.
Yeah, lines 7 through 11, basically. Isn't it?
No, 7's capital gains, so no.
Okay, so 8 through
Yeah.
11.
8 through
11 is your adjusted gross, but
8 through 11, yeah, basically. Each line item was covered in previous chapters unless it was noted that the topic is beyond the teaching scope for this class. And we don't talk about everything. We talk about the important stuff. Corresponding chapter is going to be referenced for each line item. Reference contact each chapter for more in-depth instruction. We're just kind of hit the highlights on the repeat stuff a little bit, but there are still some new things.
stuff you learn in this class, Shane has it tailored to directly apply to the type of return you would be doing if you worked for Liberty Tax in Wichita or in Kansas.
Well, and it's also with an eye of what's actually on the level 1 test too.
Right. So, do you need to know how to do a partnership return? Yeah, no.
No, you don't.
So, stuff that really isn't necessary, don't typically worry a whole lot about. You get your foot wet,
Yeah.
but
So here's our Schedule 1.
Part 1.
And it's Part 1. This is our additional income section. And we've already talked about some of this stuff already. We talked about some just yesterday.
What do they use as proof of the total amount of alimony they received?
There is a receipt.
Now that's changing this year, right?
No. It changed a couple of years ago. Had to be in place To count it as an adjustment income, that the court order had to be in place before December 31st of 2019.
Okay. I knew there was a date on it, but I didn't know what proof they carried around with them to say, this is what I got, or this is what I paid.
It's really not necessarily a proof aspect of. I mean, because I had one client who was, and what he wrote down was good, worked for me. I really, why would he lie? Because the other part of that is that it comes with its own built-in double check.
Oh,
Because as you write down your adjustment to income for alimony, you're thinking on the person you're paying it to.
oh, that's where we have to write their name.
That's where you have to at least put down their social security number. So, but right now, adjustments to income, what we're talking about, this is the person who actually is receiving it. So again, why would you lie? Because it's just going to increase your taxable income, but you can't short it because your ex-spouse who
Real quick, Matt, change. Is Department of Education where you would get a copy of student loan interest paid in issues, are they shut down?
they're shut down.
They're shut down.
That you could mail them.
What?
Whoever the financial institution.
Well, but it could be through, but we don't know who actually held the note.
Right. 'Cause mine is mail.
Anyway, where were we going with this? Oh yeah, you can't short it because your ex-spouse who paid it
Is gonna report it.
is going to be reporting it.
I think that's because I saw some, those he said, she said, and I didn't understand what they meant by the alimony thing.
All right, so we're gonna spend a little bit of time in this area. Line 1, taxable refunds, credits, or offsets of state and local income tax. We talked about that back in chapter 4. I got a refund from last year's taxes. I got a 1099-G from the state of Kansas. Do I have to report it as income? Well, my question is did you itemize last year? And in the process of itemizing, did you take the state income tax tax deduction? If you wrote it off on Schedule A, yes, you have to pay tax on your 1099-G. If you didn't file Schedule A, don't need it. What we do, especially if it's a return client, the computer already knows. I don't even have to ask that question. The computer knows what you did last year. I put in the 1099-G anyway. Because I know that if it doesn't apply to them, the program will ignore it. But that way the client saw me enter it, and that keeps them in the habit of bringing it. I don't want them to, oh, he never puts that in, so I'm not going to take it, and that was the 1 year I needed it.
And now it comes
Line 2, alimony received. This is being reported as income to the recipient of alimony. This is also back in chapter 4. Line 3 is our Schedule C. The result of it, positive or negative. Other gains or losses, 4797 property transactions. So Schedule D goes here. Form 8949, Form 4797. All go in this direction. Again, this could be a positive or it could be a negative number. This is also the one that would have the limit on it, 3,000. Line 5, rental real estate royalties, partnerships, F corporation. Schedule E goes here. Whatever the reason you had to fill out Schedule E, it's showing up here. Again, positive or negative number. Schedule F goes on line 6. Again, positive or negative number. Unemployment compensation, Form 1099-G. Well, this will be a positive number. And remember, 1099-G can come from multiple reasons. You might have multiple of them. You could have one for an income tax return. You could have another for a farm subsidy. And you could have yet another for unemployment.
Aren't our gambling forms that?
Not, that's a W-2G. Yeah. You got the G right.
I was just asking because we were talking about it.
Yeah. No,
I
that's
couldn't
a
remember what the gambling one was.
W-2G. It's the stupidest thing, I agree, because it really shouldn't be a W-2. I don't work for the casino,
Right.
so calling it a W-2 is kind of a misnomer. Because W wages, it's not.
You're right.
It is miscellaneous income. It should be a 1099 series something.
Like the G, well, stay with the G. Goes where it goes.
Can't, because the G is for government.
Oh, that's true. Well, but that's still, well, no, because you're
Because it's
reporting to the government entities, but
Because it's a W-2, does that make it earned income?
No, it does not. Because you put the G on there, it knows what it is. It just should have never been put in a W-2 series. I don't know what their logic was behind it. Line 8, other income, and that can be lots of different things. So, per schedule in line, the instructions, line 8 should be used to report any taxable income not reported elsewhere. And sometimes you might not have a form for it, you don't know what to do with it, so you can put it here. So, one of the things that we have talked about, W2G, gambling winnings, shows up on this line.
Guess I should have waited a second.
Yeah. It's one of these it's one of these number 8 lines, and then there's a letter that goes with it. Talked about this one too. Cancellation of indebtedness. You get a 1099-C. They're the happiest people in the world for the moment because now they had a big debt that was weighing them down, and the debt was forgiven, and they think they're really happy.
I got out of the bail.
Could be for credit card. It could be for home mortgage. It just depends.
Oh, mine's the one that I got last year. I don't think I was here yet, but I got one for a hospital bill.
Yeah, hospital bill, student loan.
I
Depending-
still have it.
Yeah. Well, it depends on who was holding the note, because under what Biden was doing or trying to do, he
That
was
was the forgiveness.
yeah, and he was trying to do it through the government, so he could also say no, we're not sending you. We're not going to send you a 1099-C. That's that. But if it was a private entity, if you were holding it through some bank, yeah, no, that was a totally different. Prizes and award, but not in context of your role as an employee. Well, this is where I would go if I was on The Price is Right and I want a new car. It would go here as income. So I'd rather win the cash. Thanks.
Right.
So if you sold that car in California,
You'd still have the income because it was your car.
But I
then
don't think
you have to pay all those extra fees to bring it home?
I don't think you get it in California. I think that,
Um,
I think when you
last-
win, like in Vegas, they send you home to pick out a car at a car lot there.
That's what I
Oh,
told
they
the
do in
lady
your local
in
area?
Augusta.
I don't know about that because remember when they're always, if you ever, I don't know if they still do this now. I haven't watched The Price is Right since Bob Barker was done.
Yeah, don't think I have.
But they always made the
In
big
the
deal.
day-
It comes with California emissions.
Last
Well,
year,
the cars in Kansas don't need California emission controls.
last year there was a lady from Augusta or Andover that was on there because I watched The Price is Right.
No shame in that. I like Drew Carey. I just haven't had time to watch it.
But legit, she won a new car, and because they didn't have nothing there, she got to go home with a check. She couldn't say nothing until the airing. It was all over the
Oh.
news last year.
So she
And
had to
then
sit
she
on it.
got to buy one
Okay, well,
after there.
then you were right. I did not know that.
Well, I know.
If she
I did
told
not.
Oh, yeah, they were
anybody
like, this
before
is
the
not your
airing,
normal.
she didn't get the car. So there's stipulations to win,
I don't
I'd
like
just
can't
rather
say
have the
no.
cash.
it. I
right?
stood in line for the price of
It was
right
free,
before the
so.
meeting, you know.
Oh, I'm sorry.
My cousin got on, and she wanted $80,000.
On shows like The Price is Right, your best bet is for a cash prize. Your best bet is for a cash prize because you can have taxes taken out of the cash prize.
Yeah.
If you win that $60,000 automobile, they
You gotta-
want the sales tax now.
Yeah, you got to pony up.
So that means you either have to
And
take.
you have to pay numerous states.
Well,
Possibly.
you'll have to pay sales tax in California,
And
which
then
on a
you-
$60,000 vehicle is probably going to run you about $9,000. So you either have to have $9,000 in the bank to pay it, or you have to take out a $9,000 loan to pay it, so you can take your car home. Now, when you get home and you go to register it, you'll have a receipt for the tax that you paid in California. It might offset your state sales tax. Might.
Probably.
But here's the thing: with something like that, you're probably going to have to put on your tax return, on your state return anyway, that you paid $9,000 in sales tax to the state of California.
So would you have to file a California state?
Very good. You were getting to what I was going to say next.
Yes.
No, you're fine. You're thinking ahead. Yes,
We
that is
actually
income.
like that.
That is income in the state of California. So your question is legit.
You have
And the answer is yes. I have to file a California tax return. I have to file a Kansas tax return. I have to file a federal tax return. So and you can extrapolate that fast. Let's go back to the gambling ones. I win at the Kansas Star Casino. Well, there's nothing special about that. I'm a resident of Kansas, and Kansas is paying me. No big deal. I go to Native Lights. That's Oklahoma income. Now I have to do an Oklahoma return.
If it's on.
Doesn't matter.
Doesn't matter.
It does not matter.
It's because the winnings were
You had state income in Oklahoma. And so I had one guy that he was just having a good old time, and he visited casinos in Colorado, Oklahoma, Missouri. I was doing taxes for Colorado, Oklahoma, Missouri, Kansas.
Our biggest problems is when we get our truck drivers in.
Unless they're-
Or if you
unless
have
they're-
basketball players,
Unless they're NEC, then we don't have to worry about that.
pro players, I can imagine you getting there.
It's when they're W-2 and they're getting W-2s from different states.
No, we're talking about gambling. When you've got an over-the-road driver, if he goes
Yeah,
to a
your
casino
drivers
in
aren't that big deal
Colorado,
because
New
DOT says-
Jersey, Pennsylvania, Oklahoma.
Yeah. But they park at the casinos because the casinos, hey, free parking, man. You can park here all you want.
It's not
Well, used to
I
be.
mean, like not in Vegas.
Well, Vegas is Vegas.
Yeah.
But, I mean,
And you used to be able to park at Walmart too, and they don't let you do that
Oh, they won't?
No.
Really?
Yeah, Walmart's starting to crack down on it.
Oh, wow.
Walmart parking lots used to be a big haven for over-the-road drivers,
And RVs.
especially if the truck stops were full, they would let you park in there. But the problem has become that drivers are pulling in and blocking out whole big chunks of parking spots for customers. So you get a 100-foot truck parked in center rows.
yeah,
Now-
that was the problem.
They're at the tail end, but they're still in the center rows of the parking and not on the borders where they should be. And when they started doing that, Walmart said, "Yeah, no more."
Well, 4 or 5 years ago, I have a friend from California that was driving to Missouri, and they planned their trip. They were pulling an RV, and they planned their trip to stop at Walmart.
My mom lived in the Walmart parking lot in Alaska.
So it was brought up, although it's kind of outside of the scope of what we're specifically talking about here.
Yeah.
But Suzanne brought up, okay, you're a sports player, which really has nothing to do with anything.
No, but they travel.
But
and
since we are
have
talking
income.
about different state taxes, every time you play a road game, that's income to that state.
One for each person?
Yeah.
don't get a W-2G from that state.
No, it's not
If
W.
it, if there's a limit, okay, like in Kansas, you don't pay tax on anything less than what, I mean, if you win less than $5.99,
Well, there is
$4.99, $5.99.
there is a standard deduction involved, yes, but we still have to
Okay,
make
on
the
the,
return
on the form.
to prove that we shouldn't
Okay,
have to do
But
this.
you don't even have, like, if you only win that, less than that, you don't have to fill out any forms. At the casino, they don't, the machine pages.
Yeah,
Casino here is
Technically,
twelve
In
you're
hundred
supposed
and
Vegas,
up.
it's higher, because I've won over 800 before and cashed in at the window and didn't. Well,
It's a coming up.
that's income. You're supposed to report it, whether you got the W-2G or not. It's real relevant.
nobody can prove that I even got it.
That's not the point. You just admitted to it, by the way.
Well, this was 20 years ago.
Okay.
It's 1,200 and up is when they will receive
Send you,
you.
oh, that you have to fill out.
But here's our other thing is Nevada doesn't care. Or, I mean, Nevada itself doesn't care because Nevada does not have income tax.
Oh, they don't?
They don't need it. They have all the people. There are what five states. So I don't have to worry about
Texas is one.
Tech. Yeah, South Dakota's another.
Where does their money
I don't think they worry about it. Have you ever been to South Dakota?
I just did.
They have that tour. They have some tourism.
Do they?
Well, the Black Hills, the Mount Rushmore, and then Sturgis every year.
Oh, so-
Yeah. I've done Little Sturgis, but, going to Conway Springs or whatever, that's not it.
My sister.
There's one that we go through, it's like an hour from here and come back, but I can't remember what it's called.
So let's see here. Also, prizes and awards. Technically, if I got paid by Crime Stoppers for a hot tip,
It's a wonder they don't put a little, your little thingy that says you have to report this. It's for your tax purposes, and they don't.
and
Do
you
not
remember
say that.
we're talking about the equivalent. So say that you won a prize for the Knights of Columbus, and they give you a free dinner. You gotta actually report
Well, that
that.
one year I won that antique bicycle, remember? And then the day after I had it, it was on my front porch, somebody stole it.
Reimbursements are other amounts received for items deducted in a previous year. So I put down on my Schedule A these medical expenses because I didn't think the insurance company was going to cover it. Surprise, surprise, they cut me a check. So I got to make it right. So I have to put it back in my income. I could do this or I could file an amended return. Just take your pick of which one you'd rather do.
Well, I'm always a cheapie, I gotta do it the cheapest way.
You work here, it's cheap no matter what. Serve on jury duty.
$3.
Insult meets injury. You have to put that on your income tax form. Unless there's an exception to that. If your boss kept you on the payroll and paid you a regular day in exchange for that $3 you give it to him, then you don't have to report it.
How much is jury duty now? $10 a day?
$10 a day.
No, it's
15,
not.
isn't it?
No, it's not.
What is it?
It varies
Oh, does it?
because I was there
Federal
less than a
state.
day. Hold on. I was there less than a day. We were set to do a trial. The guy,
Took a plea.
exactly, last second, we sat there for 4 hours waiting, 3 hours or 4 hours waiting. Then they sent us downstairs to go onto a new trial. Kind of sit there 20 minutes and then they sent us all home and said, don't come back. $18.75 is what I got,
Yeah, well, it paid for your
I
P
thought
pen.
that was the year you started.
right?
Paid for your P pen.
Dude, that money's gone.
Income from activity engaged in not-for-profit. So this is where the hobby income goes. You can't prove to me you're in business in a business-like manner. This is where I'm plugging that number in.
This is where I plug numbers from 1099 NECs that are minor.
Yeah.
So if you did Uber and you made $2,500, That's all you did, because you know you're doing your regular job, whatnot, but you only made like $2,500 for moving. Is it worth it to pay an extra $200 to put the Schedule C on, so I can put the $2,500 on and take your credits off, or we just put that $2,500 under other income, and we don't increase your fees that you're going to pay me at all? Because it doesn't cost anything for me to put it on, put a 1099 NEC on there as other income, like $10, I think is what we charge for a 1099,
Well, it's $10. Yeah, exactly.
as opposed to $210. Because you're going to get the $10 for the form, and then you're going to get $200 for the Schedule C.
Dividends on insurance policies to the extent they exceed all of the net total premiums paid for the contract. Insurance dividends are treated as a return or a reduction of the premium, so they're usually not taxable. However, if the dividend exceeds the total premiums paid, it is taxable. These were these policies, and they're probably still in existence, but there was one year my mom and dad listened to this guy that, well, it was it was life insurance, yes, but it really was more of an investment tool. You paid a premium, you got life insurance, but the whole idea behind it is that they were putting it in and investing it so it would grow. So yes, I got a $10,000 policy, but hopefully, by the time you reach a certain age, that it would be worth so much more. Okay, well, basically what we're saying here, and I'm oversimplifying, keep this in mind, but I paid enough premiums to make that $10,000 policy, and then, so if it went past that, and I'm oversimplifying, so it's worth $12,000 and I cash out, I have to pay tax on it too. Taxable distributions from a health savings account. Well, a health savings account is just that. It's designed for me to buy medical crap.
Yes.
If I don't buy medical stuff with it, it's taxable income. What?
So I was going to the 88, 89 to an HSA, and it asked if there was any qualifying non 20% penalty for non-medical stuff. You know what I'm talking about?
Yep.
Yeah.
What is that again?
Remember, this is also capped. There's only so much money that can go into it, and otherwise you start getting hit with over contributing.
Okay,
So you do have to spend
okay.
on some of these plans.
And some plans allow you to pull money out of the plan as cash and don't require that everything spent out of that plan is on medical expenses.
But
Right.
it has to be under a certain stipulation, correct?
It has to be part of the plan.
So is that like
where
a
was it
U-card?
like a stipulation situation? Hold on, I got one right here.
Cause I have a U card and I get a little lot more,
Yeah, but
and I can use it any way I want.
Right, but that's not an HSA.
Amount accepted from the additional 20% tax. And if you look it up online, it says you have to have a certain, you have to have a certain event to get it. So I didn't know if you knew anything about that specifically.
not accepted would still be buying stuff that's not medical.
Yes. Go ahead, Shane. I'm sorry.
So now it's gotten a lot simpler because these HSA cards have HSA payments now starting to come out on cards rather than as a check or cash. And so generally when I ask the question, I already kind of know the answer because the card doesn't really allow you to go out and buy things that aren't related.
I just used mine for groceries last night and it worked.
Yes. Okay.
But like Matt said, yours isn't a true HSA.
Cause it's not coming out of an employment.
Right. A true HSA, you've got a 1099 SA to go with you.
This is through patronization.
So, no, this is an additional plan that you sign up through your work. And you got a W-2, with code W on it.
Right.
And so they throw out $500 most of the time. Say, okay, here's $500. Go spend it on medical.
Right.
And I can spend it on anything medical. I could buy Band-Aids with it. That's fine. I could buy aspirin. I could my office copay. It doesn't matter.
Three
What?
conditions to not get that extra 20% for non-medical. Age 65 or older, and they can take it out as a cash withdrawal situation. Disabled, and you can take non-qualified distribution or death.
Still have to claim it as income.
Well,
You just don't get hit with the penalty like on your retirement.
right.
But that's basically what the whole card's for all 3 of those. What else would fit?
Well, no, you're not.
No.
65.
This is for non-medical.
Non-medical.
I know, but I'm just saying it. Does it
If I
not-
just took it out in cash and then spend it because
Like
I
you
need to
did.
pay my electric
Yeah.
bill, I'm not gonna get hit with an extra 20% penalty.
I mean, for the qualifications, you said the older people, disability, whatever.
That's
What
not-
else is there?
Dead. Well, okay, so
No.
what do all these people have in common?
The disability. of
Except for the dead person.
They have Medicare or something.
They're on Medicare or Medicaid.
Mm-hmm.
Right. So Medicare and Medicaid doesn't usually have
And HSA.
HSA. Then I'm talking about whoever works at Dillon's and has an HSA through there. That's the situation.
It has to be included
In
or
it.
attached to a W-2.
Yes. No.
No,
No.
it comes
No.
with its own form.
No, I mean, but you have to have a W-2 to qualify to have.
You have to have a
an
W-2 with the code W on
Right.
it.
Yes.
You have to have a
It said that.
you have to have a job.
Right, that's
For
what
one.
he just said.
And then, not only do I have to have the W-2 with the code W on it, I also need the corresponding
1099
1099 HSA.
essay.
SA.
SA, sorry. I said it right the first time.
Yeah.
You guys are just
Yeah,
too
you
busy.
guys were there. And that's
Yeah,
what
you
he
did.
said.
Sure. Roll back the video and see.
Liable story.
Do not report any self-employment income or any non-taxable income such as gifts and bequests. There is a cap to the gifts. It's like 1.3 billion lifetime. But there's a form for it that you got to keep track of. So every year that you got a gift, you actually have to fill out a form for it. File it with your taxes.
For most personal, it's 13,000 a year.
Yeah, there is a cap, but the cap is somewhat secondary to the overall lifetime cap.
Right.
Bequests, this is just being a dead person said, you get all the money, I don't have to pay tax on that. Proceeds from life insurance policies paid due to the death of the insured, well, that's just kind of the bequest.
Yeah.
And child support is not taxable, never has, never will be.
I still think
And
they
we
do
don't-
need to report what you're spending it on.
No, I don't.
And
I do.
and the only place we ever list child support on a tax return is on the head of household tab under our due diligence.
Yeah.
And the only reason we list it is so that we can help the IRS to understand that this woman makes $10,000 a year. She's got 3 kids.
How does she afford it?
How does she afford it? Well, she might be on Section 8. She might have food stamps. She might have gotten a $12,000 refund last year, and she might be getting $1,000 a month in child support. So if she's making 10 and she's getting $12,000 in child support and another $12,000 on a refund, she's got enough money to support her kids.
Yeah, she's got plenty of money.
Granted, none of the $24,000 of that never goes on the return
Yeah, it doesn't show
as
up
income,
officially. Yeah,
but we can use it in due diligence
yeah, it does.
to,
Yeah.
to qualify that yes, she had enough income to support the credits we're applying to her.
Okay, Schedule 1, Part 2, adjustments to income. So at this point, we've kind of made our income situation as bad as it's going to be.
Mm-hmm.
So now let's try and fix some of it. We're going to make things go down. First one, educator expenses. If you're an eligible educator, up to $300 of qualified expenses can be deducted as an adjustment straight up on Schedule 1. If you and your spouse are both eligible educators and filing jointly, up to $600 can be deducted, but not more than $300 each. Expenses that exceed $300 limits are eligible to be deductible on Schedule A. So this is where I give you information for the upcoming season, but if you take the test, it's no longer. This is something new. An eligible educator is kindergarten through 12 teacher, instructor, counselor, principal, or an aide who worked in a school for at least 900 hours during the school year. And I did calculate that out for you. It's 2,700.
Putting in the W-2, you have that W. You need to make sure that you do the 8889.
So paras that aren't full-time but do buy things, and it doesn't have to be, it could be anything. Candy, if it's used as a reward for the classroom or a particular student. My wife is a special education teacher. You'd be surprised what's on some of these IUPs. Well, if he works for 30 minutes, he gets to go down to the office and get a hot chocolate. What? But it's in there. But like I said, it could be just about anything that's used for school or in the classroom, or not even in the classroom. It could be for books. It could be for, she wanted to take a special class.
Yes, well, that's when
I could put it here.
Number that's in code W.
Toner for her printer.
On the
88,
I put it here.
8889. I put it in for total dispersions and I put it in for qualified.
My son and daughter-in-law both teach,
And that zeroes this out.
so they get the 600. But let's play with that a little bit. She spends 4, he spends 2. She's not capped.
We don't know apples and oranges.
We say that okay, it's $300 or $600 total. Well, I could take her extra one and put it on his available.
Still
As long
used
as the
for
whole
same-
number is 6, you're good.
Yeah, and it's still used on the same thing, it just,
Yeah,
As long as it's a joint return.
yeah, as long as it's a joint return. They're not going to split hairs or well, hey, he only spent $200. Well, but she spent more, so.
Yeah, if they're doing married filing separate, then it's 3 and 2. But if it's a joint return, you can use the total.
So K-12 teacher, and we're talking or para, but we're talking about a professional. It can be public or private, but no homeschoolers. And sometimes you'll get that question. A homeschooler will come in and say, "Well, do I get the teacher deduction?" No, you don't.
They don't get any deductions for the homeschool.
No.
No, and I had one 2 years ago that had taken her kids out of public school and was homeschooling them, and she was a teacher. And to sit there and explain to her, I understand you're a teacher. You are a credentialed teacher. You could go work at USD 259 as a teacher. I understand that, but because you're homeschooling the kids, even as a credentialed teacher, you don't get.
She's not getting the $900 pay.
Well, she's basically that's it.
I got a question on that, and this is on the.
Because it says in a school.
I
Yes.
got a question on that, and this is on the Kansas side. So it's not federal. But the state of Kansas, sometimes you can register to homeschool as a school. Does that make it legitimate at that point?
From
Or
the
you
state
can
of
claim
Kansas,
for-
it does,
for
because they have
Kansas?
the state of Kansas. They could because they have that additional educators credit,
So we could put it on Kansas.
but it's non-refundable.
Yeah, but we can help some. It's worth it. If not, I get that too.
And substitute also counts. So like Joe, who's in the evening class, she's a long-term sub in Hayesville for this year because the 4th grade teacher that usually is there is out on maternity. going to do long-term stuff. That's fine. Qualified expenses in this include ordinary and necessary expenses paid in connection with books, supplies, equipment, including computer equipment, software, services, other materials used in the classroom. Does not have to be required to be considered necessary. I don't have to buy the kids candy, but it sure helps. Once a month we go to Sam's and she picks up some goodies.
Especially nowadays, since you got kids that are bouncing off the fucking walls.
Well, she doesn't do candy so much as she does, like, chips.
Yeah.
Yeah. Karen used to buy like the puffy stickers or the pens with the weird little funky tops, stuff like you do them as rewards.
Yeah.
You
Well,
know, you got all your work done. Super. Go to the rewards bucket and grab you an item.
your problem right now is that most kids, at least at middle school level, are food motivated.
Right. Well, yeah. Karen was dealing with more with the K through 5
Yeah.
special ed kids. So.
Yeah, where something shiny is good enough.
Right.
Qualified expenses also include fees for professional development courses taken that are related to the curriculum you teach or to the students you teach. Now, there's a catch on that because a lot of these things that we're talking about right here could also be considered for lifetime learning credit. So I take those, if I'm figuring out educator expenses, I'm looking at class stuff last. Yes, it would be more powerful here because I'm decreasing my taxable income right now. But if I've used it up and still have my education stuff, the classes that she took, I'll run it over to lifetime learning credit. So just make sure you use that last.
Yeah.
Qualified expenses do not include expenses for homeschooling or non-athletic supplies and courses
For courses in health.
for
and
courses
physical.
in health or physical education. It's a wide open.
Yeah. If I'm a PE teacher and I go out and I spend $500 or $300 on new softballs because the school system doesn't have a budget for softballs, and I'm going to do a 9-week course on softball for PE because I run out of ideas of what I'm going to do for these kids. So I go out and I spend $300 on softballs. I can claim that because I'm a PE teacher.
Right.
The math teacher that goes out and spends $300 on softballs, yeah, not so much. If the math teacher is a softball coach, I'll give it to him. But if it's the math teacher and math is all he does, and he buys $300 worth of softballs,
I disagree with your assessment. If change it to language arts, and I'm on board. I have a highly visual kid that's having a problem with math, and I've got 3 softballs. I subtract 2 softballs.
Okay.
How many softballs do I have left?
okay. All right, I'll give you that one.
And I say that because
You've done
I
it.
live it.
Yes, you've done it. Okay, that's fine.
Does Crystal use a lot of food?
She tries to avoid it as much as possible, but
I did too, because it was like teaching a child like an animal in the zoo.
well, and the problem is that
Performing on
these are
TV.
middle school kids. There's a point where, hey, I went to work. Somebody's not giving me a bag of Takis for standing up here for the last hour talking to you guys.
Mhm. I use things, like M&Ms, because kids can color sort them. That you got 2 yellows.
Remind me to pick up a bag of Takis Monday.
Well, I mean, let's face it. One time, Crystal had a book that was actually destroyed by a roof leak at Hadley, but that's beside the point. You had a book that was teaching math with a Hershey's bar
Mm-hmm.
because it's
Fractions.
divided. It's
Yeah.
divided out into those nice little grids, so it was doing fractions.
I think I had the same book one time. Or the printout, one of the two.
So again, I want to hear about it.
Yeah.
Softball in the math class, I'm not rejecting out of hand. Softball in the language arts class, unless
History
you're
class.
reading Casey at the bat, maybe.
Yeah, but then again, you know, you have to find that little, for that kid, it could have been he's the jock and it caught on that way.
Or it could have been that that's the reward.
Mhm.
Yeah.
We don't know. I mean, I need more information, is what it boils down to.
Yeah,
Qualified expenses must be reduced by the following amounts. Well, we're not worried about if I used money to pay for school supplies that I did not pay taxes on. Well, obviously, I already got my benefit. Any non-taxable qualified, well, that falls under those. That falls under those. Any reimbursement received for these expenses not reported on W-2 box 1. Occasionally, the school district will say, here's a Visa card that has $300 on it for school supplies. Go. That's not income, but also it's not write-offable.
Right.
PTO, when we did fundraisers and things, we used to do it like
But if she takes that $300 card from the school and goes out and buys $600 worth of supplies, the $300 she paid for out of pocket, you
Still
can give her
count.
credit for.
Yeah. I just have to discount the first 300.
Right. And if she's cashing in savings bonds to buy school supplies, we're probably never going to know about it.
And she's probably not doing it, and I'm not going to look at it that way.
No.
I'm not sitting there saying, okay, you cashed in school, you cashed in some bonds. Good job. Oh, and by the way, give me your receipts because I'm going to say use the money someplace else.
Yeah. Yeah. If you come in and you give me paperwork showing you cashed in 3 double E bonds and bring me $300 worth of receipts for school supplies, I'm not even equating the $300 in school supplies with the $300 in
So
savings
expenses,
bonds you
yeah.
cashed in.
No, I'm going to say you used it to pay. She's back there. I'm going to say they used it to pay your electric at home.
Yeah.
It went to your mortgage.
Yeah.
All right. This one I'm a little fuzzy on at the moment. I've heard some conflicting information in regards to Form 2106 from OBA.
Okay.
Well, I've heard one where it was completely shot down.
that. You keep saying oboe, what is that?
One big, beautiful bill.
baby.
The One Big Beautiful Bill Act. OBBBA.
Really?
I
OBA.
thought you said they weren't calling us that.
They were, and I forget what they were trying to change it
The
to.
Working Families Tax Cut
but, yeah,
Act.
which is what it should have been from the
Which
first
is what
part.
it was. That's what the actual bill was that went to the floor in the House and went to the floor in the Senate. When the president was talking about it, he called it his One Big Beautiful Bill.
And that's what got attached to
And
it.
that's what got attached, just like Obamacare.
It's
The Affordable
Act.
Care Act is the Affordable Care Act. They nicknamed it Obamacare because he got it pushed through his Democratic Congress while he was president and signed it into law. So they nicknamed it Obamacare. It's
And-
actually the Affordable Care Act.
And I don't care for either nickname. I don't like nicknames of bills. It is what it is.
Yeah,
I just don't watch the news, so I didn't know what it was.
it's actually the Working Families Tax Cut Act.
Yeah, which is what they're trying to get it back to. But
Yeah.
that's swimming uphill because every time the president goes out and talks about it, what does he call it?
The One Big Beautiful Bill.
Yeah.
And then every Democrat comes in behind him and calls it the One Big Ugly Bill. Instead of just calling it the Working Families Tax Cut Act.
All right. So I'm going to talk about it because, well, for 24 it was still possible anyway. Certain business expenses of reservists, performing artists, fee-based government officials. Form 2106 is currently an adjustment to income. A long time ago, before the Tax Cut and Jobs Act back in 2017, 2106 was a Schedule A form. And it was for expenses that I racked up for my use at work that the boss didn't pay me back for.
When they killed this hurt our truck drivers.
Yeah.
Not our owner-operators or our lease drivers. But prior to 2017, if you were a company driver, you were allowed was $63 a day per diem
Yep.
for every day you were on the road as a company driver. If, as a company driver, I had to spend $300 to replace my CB in my radio, I could put it on a 2106. If, as a company driver, I had to go out and buy new steel-toed shoes because when I go into the chemical plants, I am required to have steel-toed boots on, I could put that on a 2106. If I was paying for this all out of my own pocket, the expenses that I incurred over the road, I could put on the 2106 and get credit for as an adjustment to my income. The
Tax Cut and Jobs Act.
Tax Cuts and Jobs Act killed it.
It gutted it.
Yes.
It pared it down to what we're about to talk about.
Yep.
So,
And clergy. It doesn't
Well-
say it on there, but clergy is on there as well. Clergy is allowed
yeah,
to use the
clergy
2106.
so- And I did that too. So, 2106 business employees will be used by the Armed Forces Reservists, qualified performing artists, fee-based state or local government officials, and employees with impairment-related work expenses. So, if I was deaf and I could still kind of hear, but in this environment I needed something better, I could buy special hearing aids that I use at work. I could actually write it off.
But you have to pay out of pocket for those, you cannot use your insurance.
Right,
Right.
and these are out-of-pocket expenses.
Right.
Right.
Well, technically, that magnifying glass that you're sitting next to, I could have written it off because Susan,
Yeah,
with her glasses, was still having a hard
And
time
the lights.
seeing.
and the light, she had to have a light.
Yeah.
Yeah.
And so technically that would fall under that category. I could have written it off. I didn't, but I could have.
Yep.
Now what about, because she always had a fan in some instances.
That would be that's going to be negligible. She wouldn't
It was an ADA setup.
she doesn't have to have it. She could have sat there and done what she needed to and
Not passed out.
not passed out. The fan there made it easier,
Mm-hmm.
but it didn't inhibit her from being able to work, not having it.
Yeah, this has to be impairment related. Now, if she had a doctor's note that said, you must have a fan.
Yeah.
Well, Michelle has her, like Brenda, had her oxygen.
Yeah, but
and
keep
things,
in
but
mind,
that
those are
came
actual
through-
medical expenses.
Medical,
They're not job
yeah.
related.
Yeah, those
She
are-
has to have that whether she's doing the job or not. That thing right there, Susan could see. She could drive.
Mhm.
Well, and I'm the same, she's not the only one.
Right.
Hell, I wish I had one occasionally because some of these things are getting harder and harder to see.
All these receipts. Oh, yeah, because box 12 and 14 gets us quite a few times because we can't see it.
So these,
Yeah.
again, are expenses that I had to incur in relationship to what I do. So when we're talking about, okay, we covered the employment related work expense, impairment related work expenses. Let's go back to fee-based state and government local officials. Hey, this is where what Matt was talking about. If they were out on an extended assignment and they could take the government per diem and write it off. So your National Transportation Safety Board guy, who is currently in New Louisville, who's based out of Wichita, he could be writing off his per diem. He could be writing off his hotel.
Are per diems statewide or is it per company?
There is a federal form for it, and it does look at regions
Okay.
because it realizes that being in New York is more expensive than being in Wichita.
Now, and different agencies have different. So, like if you're talking an over-the-road driver, you would need to go on and find out what the U.S. Department of Transportation per diem is,
Yeah.
because that per diem covers every driver in the 48 contiguous states. Whether you live in California, New York, Maine, Texas, Florida, doesn't matter. That per diem is the set per diem for all over-the-road drivers across the 48.
That's what I was.
Yeah, and there is a special per diem if you cross the border.
Yeah, if you travel into Canada or go into Mexico, then there's an international per diem rate that you can get for those days that you're there.
Okay, so working backwards, qualified performing artists. They've oversimplified this. I found out there's actually a little bit more to this. You had to be you couldn't. Let's try to get this straight. I had to work for some place like the Wichita Symphony Orchestra,
Mm-hmm.
but I can't work too much in other places. There was a cap. There was an income cap, and I forget what it was.
Oh,
Didn't
Yeah.
Bob's daughter,
No, but Susan had a client. She's since retired, but
played
she
violin?
had
yeah,
a Stradivarius.
Right.
yes.
I thought it was Bob's
No, it was Susan's client. She had a Stradivarius. If you don't know, Stradivarius is the absolute top grade of
daughter.
violin, and you know the guy that made it's dead. You know you're not going to replace it. She has one. She plays for Wichita Symphony Orchestra. There's only certain places that she would obviously send it to for repairs or maintenance. You're not going to send it just to anybody.
Yes. Not anybody can just do the maintenance on it.
Yeah. And so those expenses I could actually write off. For instance, I could go farther. I mean, you know, mime buys all the makeup, you know. The dude's gonna wait. That's what we want to happen to mime. So on and so forth. That's here. Armed Force Reservist. I've been transferred.
That's
Not the moving expense, but there are other expenses I can be putting in here.
well, yeah, but for the reservist, that's more for the expenses that they're talking about for the reservist here. Honestly, are more geared towards their 2 weeks a year
Ah,
that they have to serve. So you're a reservist. You're here in Wichita, Kansas. But for your 2 weeks of service a year for your reserve duty, you have to be in Fort Benning, Georgia. Well, if you drive from Wichita, Kansas to Fort Benning, Georgia, because that's where your 2-week duty station is, your mileage there and back, the mileage that you rack up while you're there, your expenses there and back, you know, if you have to stay in a hotel, whatever, those expenses you get to put on the 2106.
Then again, everything but food.
50%. 50%, so long as you're not being extravagant with it. So, you know, if you're going to IHOP and having dinner and having breakfast and you spend $40, you can keep 20, you can put 20 of it on there for an expense. You know,
qualify as an Armed Forces Reservist, you must be a member of a reserve component of the Armed Forces of the United States who traveled more than 100 miles away from home.
right.
So from here to Junction City would,
No. But from here to Manhattan, might.
Hmm.
Because I think that's over 100 miles.
Junction City's over 100 miles, if I remember right.
it was 90.
It's really on that cusp. Maybe it depends on where I started out in town.
I'm thinking about my dancer.
That poor little
I'm thinking about my
girl. I
dancer.
couldn't do that. Travel like
The amount of expenses deductible is limited to the regular federal per diem rate for lodging, meals, and incidentals, and the standard mileage rate for car expenses, plus any parking fees, ferry fees, and tolls.
From here to Junction City is 117 miles.
So yes, move 17 miles closer. So from my house, it might be iffy. From your house, it's out of the question.
Yes. Yes.
He lives in Newton.
Because my nephew does his reserve duties at the
Yeah. So
Right.
He,
So if he lives here in Wichita,
he could write off.
he can the mileage that he expends every weekend driving up there and driving back. You know, he goes up there on Friday night to
only
report.
one weekend a month and then 2 weeks.
Right. So he drives up there on a Friday night,
I'm gonna have to run.
checks in, and then Sunday afternoon checks back out and drives back down. That 234 miles, he can get
An adjustment. to
an
income.
adjustment to income for mileage. And he can do that every month. So that times
that.
12, presumably, or times 11,
11 and 9.
plus his 2 weeks. So like we were saying before, if he had to report to Fort Benning or Fort
But he
Dix,
stays on base, so he would be able to claim in the hotel.
No, he doesn't.
well, from here to Junction City, no. But if he had to go from here to Fort Leonard Wood in New Jersey, and it might take him 2 days to get there, then the hotel room he stays in between that,
Well, it's going to fall under the per diem. They said follow the per diem rate for lodging, meals, and incidental expenses. So it's limited to your per diem.
okay, so he could get a per diem,
But
whatever.
you said this is changing, right?
I have some questions. Now, the military one is the one that I have the least amount of questions
Per
on.
diem is refundable? You gotta use the whole thing?
No,
No.
use it or lose it.
Yeah, so the per diem is not a tax credit, it's an adjustment to income. So if you have $25,000 of income and you have $30,000 of per diem, your income is zero. It's just an adjustment to income. And you don't get to roll that other $5,000 of per diem you didn't use because you didn't have the income for it to next year. It's done and gone.
But also, it goes even farther than that because I'm looking at per diem. If the per diem's $63, but I cheap it out and I only spend $25, I don't have to prove that I spent $63.
No.
I just have to prove that I was out. I get it, regardless of how much I spent.
Yeah.
Because I mean, for Pete's sake, if it came down to it, you could sleep in your car and eat a McDonald's.
Exactly.
Well, think about a truck driver. A truck driver, last year, the truck driver's per diem was $66 a day. There's no truck driver spending $66 a day. He's going to spend $10 or $15 in the morning for breakfast. He's going to spend $10 or $15 in the somewhere along the line for a Subway sandwich or a burger, and then he's probably going to spend $15
Buffets.
for a buffet at the truck stop. So there's $45. He still has $21. What? No.
Showers is different.
Showers. If he pulls into a truck stop and gets fuel, his shower is free. And most every truck driver on the road puts in at least $75 worth of fuel every single day so they get their free shower. I don't know of a single truck driver that doesn't.
They know how to work the system.
I mean,
They have to.
yeah. So,
Right.
but yeah.
So, performing artist, you must perform services in the performing arts as an employee for at least 2 employers during the tax year. So, not only did she have to work for the Wichita Symphony Orchestra, she had to work for somebody else.
Like a wedding.
Prairie Pines. They used I don't know if they do it anymore or not, but they used to have the summer series where they had concerts in the gardens. Botanica used to do that
yeah, I
too.
was gonna say you
Yeah.
That
Prairie,
one count?
Prairie Rose.
Yeah, Prairie Rose Truck Wagon.
Prairie Rose Truck Wagon.
did. I've never seen anybody but the players play that.
Not
Received
typically,
at
but
least-
that kind of a venue.
Receive from at least 2 of those employers wages of more than $200 or more per employer. So you have to be serious about this.
Yeah.
Well, for her, she was lead violin. Not a problem. Had allowable business expenses attributed to the performing arts more than 10% of gross income from the performing arts. Fixing the Stradivarius wasn't cheap, and she insured the hell out of it in the shipping,
Well,
which all is legitimate expense.
yes.
And most of the time, she actually just drove it there because I'm not going to trust.
Well, I think Susan said at one point that she had like 1.5 million of
That's
the
right.
insurance
It
on
was
the
over
on the
$1
violin
million.
On the violin
itself.
itself, yeah.
So
But still, I still don't think you can touch one's own.
No. Had adjusted gross income of $16,000 or less before deducting expenses. This is where I was having. Like, you aren't really making a lot of money. Here's the cap. So
yeah.
at this point, unless I'm single, I really don't even have any taxable income. So there's really no point until I got this form.
Right.
If married, and a joint return must be filed unless you lived apart for. So married filing separately need not apply.
Right.
Now he also was, if I remember right, he also did played an instrument, but I don't remember what it was because it wasn't impressive as the lead chair violin with the
I
Stradivarius.
think it was
Right.
cello.
Was it? I don't
I think
remember.
so.
But still, I mean, unless they were
trumpet.
unless they were getting W-2s, if they were being paid as a 1099 NEC as an NEC, an independent contractor by the symphony orchestra, which
Doesn't count.
I would assume would be the only way to do it for the symphony orchestra, would be to pay every single performer as an independent contractor.
Yeah, I don't know. I mean, I can see where Botanica or the
Would be a
Zoo
contractor.
or Prairie Rose or Prairie Pines would do it as an independent contractor, but I believe that you're actually an employee at WSO. So you just need to find another gig. It could be just a regional, it could be Hutchinson. I don't care.
To get all of her expenses on. If she was being paid more as an independent contractor, I'd just do a Schedule C for her and give her everything.
I would too. And in fact, that's kind of what was happening because she also tutored.
Okay.
And so that's what Susan did. I bring it up because this is how I introduced the subject. But since she was tutoring violin lessons,
Schedule C.
Schedule C,
Yeah.
I take everything.
And
I
put
don't
all,
care.
and put all, every single expense towards the activity, whether it was with the symphony orchestra or not. Every single expense towards her
'Cause-
profession goes on that Schedule C.
Because the
But that's
violin's a
not what
violin.
she did for a job, though, was it?
No,
I think she worked for the city or something on top of that.
by the time that Susan was here, she'd been retired, and she was retiring also from the violin.
Oh,
So I don't know about that backstory. I wasn't with her long enough
yeah, I
to get
think
it.
she worked somewhere else too.
But see, that's your problem. Is that adjusted gross income of $16,000 or more, you're out here.
Yeah.
So a qualified fee basis official is employed by the state or political subdivision of the state and is compensated in whole or in part on a fee basis. We kind of jumped to the other one, that fee basis employee working for the government. Although they are limited to a state. So my example, the National Transportation Safety Board guy who just left for Louisville, doesn't count. Although the guy that we did do one year that was a National Transportation Safety Board guy was actually an independent contractor. He'd recently retired and they hired him back to investigate a plane crash.
God,
Well, I mean, yeah. I mean, if you were a private citizen, you know, with the expertise,
Yeah.
and you weren't permanently on staff with the NTSB, and they said, "Hey, look, we know your credentials. We need you to come on and
Well, sure.
investigate this crash. We'll pay you $15,000 for your time. You are a fee-based employee by a state or political subdivision." At that point, you're not an employee of the Department of Transportation. You've been hired as an outside consultant.
is that what a GS status is, general servant? Or whatever GS is?
Government
It's
service.
a government service, and that's just a category saying that you're an employee of, and then it goes to level.
Your GS
My uncle was 13.
your GS status determines your pay level. Kind of like in the military, your rank
Yeah.
determines your pay level. Same thing in the
Well,
government.
he couldn't go into the military, so he did GS
Right,
for the Pentagon.
right.
All right, which has nothing to do with what we're talking about. So,
Well, no, because it's a government, but he was not in the government, but he was paid like he was in there.
yeah, but this is talking about fee based. So
Yeah.
I'm not getting paid by the hour. I'm getting paid by
Yeah,
piecework,
he actually worked for the government.
Because they brought him
and he
back
doesn't
like
qualify for this.
Right.
This is more like the guy I was talking about, who was the subcontractor hired to go. So he's getting paid a fee base, not by the hour.
He's getting paid X amount of dollars for this one task.
that. Right.
And that's it. Once he's done with that task, he's no longer employed by the NTSB.
Because when Uncle Richard retired, they brought him back to go do a couple of things. And
Okay,
At
at
that
that
point,
point, yes.
that's,
he
that's
would've
what I
been-
was talking about.
yeah, at
That's
that
No, but you
point-
started talking about GS, so you were
Well,
way
he
off.
was GS status, but then when he went back, that's what he was.
They may have compensated him based off of his prior
Yeah.
prior salary level
Yeah.
when they brought him back. But once he had retired, when they brought him back for a specific task, and then when that task was done, he was no longer employed with them. That's where he falls under this. But if they would have brought him back and kept him on,
At his previous, it doesn't.
right? If they actually re-employed him and not just brought him on as a consultant for a single purpose, and then when that purpose was done, he was done. You see where we're going? So yeah.
Alright, so this is what our 2106 looks like. I love our attachment sequence on this. We've gotten down to attachment form number 129.
Is that what this one is?
Yeah. So if you're doing a paper return, this is the 129th form in the stack. If you're
Yeah.
using them all.
If you have to do a paper return when you print it out, just make sure everything stays in line with how it's printed out.
Yeah,
It'll
it
be all
prints out.
right.
It'll print it out in order.
Yes.
2106 continued. This is for our vehicle expenses. Adjustments to income from health savings account deduction. As HSA deduction is available if contributions were made to an HSA during the tax year. This does not include employer contributions, rollovers, and qualified HSA funding distributions from an IRA. So I'm getting an adjustment to income for having a health savings account. I get a little bit of credit.
Well, your adjustment to income on that is determined as to how much of what you spent out of that HSA was spent on qualified medical expenses.
That too.
If you spent $500, if you dispersed $500 and you spent $500, then your adjustment is zero.
Right.
But if you dispersed $500 and you spent $350, then you have a negative $150 adjustment because they're going to add that to your income.
Moving expenses for the members of the Armed Forces, Form 3903. Again, this is one of those things that got really gutted during the Tax Cut and Jobs Act in 2017.
Yep.
Which you may thank God for this because this form was incredibly complicated. Because to count this, at one point my new commute had to be 50 miles farther than my old commute. Just to even begin to count. That was a pain.
Yeah, if you got transferred from Boeing Wichita to Boeing Seattle, your commute here was 15 miles and your commute there was 5 miles, you're done.
Yeah.
Is it called Boeing again yet?
Not yet, but I was working on it. So, for tax years after 2017, only a member of the Armed Forces on active duty and due to military order move because of a permanent change of station can deduct their expenses. I'm getting transferred from Fort Dix to Fort
Hood.
Hood. Okay. I'm going a long ways.
New Jersey to Texas.
I'm not sure that's an improvement or a non-improvement.
Yeah.
Each one has its advantage and disadvantage.
You hire United Van Lines to move you, all of those expenses,
I can write off.
you can write off. Your mileage from Fort Dix to Fort Hood, you can write off.
Yeah. Lodging, food.
All of that is a write-off.
All right. So only expenses incurred because of the permanent change of station are deductible. Permanent change of station includes a move away from home area to the first post of active duty, or a move from one permanent post of duty to another, or a move from the last post of duty to a home or nearer point in the United States. And for that one, you must do it within 1 year of your separation.
And if
So-
you get somebody in from the military, this is the one subject you don't bring up unless they do.
sore spot.
Yeah. Normally, if I get a soldier in to do his taxes, and he gives me his W-2, I don't ask if he just moved here from somewhere else. I just do his return.
Yeah.
Now, if he comes in and says, "I understand my moving expenses can be taken off," then I will get into it with him. But I don't typically volunteer this information.
But sometimes the military pays for it.
Sometimes.
Sometimes.
Then they don't get
When
this.
my son moved from one base to another, the military packed him up and
Yeah. And
Yeah.
if that's the case, he has no expense, he has no adjustment.
Right.
But there are other aspects about this that even if that happened, if he had any other expenses that were out of pocket that weren't reimbursed or covered, he's still
like his liable.
yeah, he's still eligible. So like you said, yeah, they packed him up and they moved him to military transport, but he still had to drive his car there. Then he's got an expense.
If he had to move from Fort Dix to Fort Hood, he's looking at $5,000 or $6,000 to pay somebody.
Reasonable unreimbursed expenses of moving you and members of your household can be deducted. A member of the household will be anyone who has both the former home and the new home as their main address. Temporary absence is allowed, of course. Qualified military moving expenses fall into the following two categories: cost of moving household
You
goods
have to
and personal
provide the
effects,
expenses to
reasonable
you
travel and lodging
and your family,
expenses.
if you have one, from Fort
But you
Dix
only get
to your
21
permanent
cents a month.
duty station. Box everything up. The military will pay somebody to come in, load it, take it down, unload it in your new quarters.
Probably one of the simpler forms you've ever seen. Attachment sequence number 170.
And it's only that simple because it's only for military now.
But there's a lot of things that we can put in there. I mean, if you had to pay a special cost for terminating services utilities in one place
Mm-hmm.
or activating utilities in another place, that's actually an expense.
Yeah, if you had to put a deposit down
Yeah.
at your at where your new duty station, your new home, if you had to put a deposit down to get the water, the electricity, the gas turned on, that would be a moving expense.
If your spouse took a special flight out to the new post of duty to scout the lay of the land and do a couple of job interviews and find a place to stay, that's an expense.
Yeah. Well, the service member that's being transferred, if he flew down to his new duty post so that he could get his new residence, because when he gets transferred from Fort Dix to Fort Hood, he doesn't have a residence there yet. When he gets there and he reports for duty, they'll tell him what housing unit or he's assigned to. They won't know. They won't know before they leave Fort Dix where they're living down there. So he'll go down, secure that, and then when she comes down with the kids, his flight down, the rental car or the Uber from the airport to the base.
Yep. But let's not overlook the fact that maybe she took that special trip because she, I need a new job, so I'm going to go find, I'm going to do a job interview.
Yeah.
That's an expense that you could take because it's related to the move. The only reason why she needs the new job interview is because she can't stand the old one.
So if she flew down, secured a job, flew back, and then he flew down to report for duty and secure the residence,
That's two different.
that's two different air flights that are qualified expenses for the move.
Correct.
Okay.
Another adjustment to income. We've talked about self-employment tax. Well, 1/2 of self-employment tax is an adjustment down on income. You don't have to pay income tax on half of your self-employment tax, which is fair. This is an adjustment because if you're working for the man is paying half of what would be considered your self-employment tax.
Yep.
So when you're the man, you get to write it off on your taxes.
Yep. Most people sit there and go, "What's this self-employment tax?" The easiest way to explain it is
Medicare and
it's
Social Security.
Medicare and Social Security tax that you would be having taken out of your paycheck if you worked for somebody else. So the self-employment tax is the tax that you would pay in to make sure that you have some kind of retirement. Social Security and Medicare when you hit 65.
If you're self-employed and put into a SEP or a simple qualified plans and qualified plans, you may be able to take an adjustment to income for your contributions to these retirement plans.
Mm-hmm.
You can contribute as much as 25% of your net earnings. You can put all of your net earnings from self-employment into a simple plan up to $16,000. There is a catch-up. Self-employed individual can contribute up to $69,000 to a 401k, and there's also a $7,500 catch-up. So the catch-up rule is not new. In fact, some of these caps aren't really new either. That $69,000 on the 401k, that's something that we've discussed. You just have to be self-employed, and you have to have positive Schedule C income.
Yeah, if you're socking away $76,000 a year into a 401k because you're self-employed, you're probably making 150, 200,000 a year.
Line 17, self-employed health insurance deduction. Again, I have to be self-employed, and well, you may be able to deduct the amount you pay for health insurance for yourself, your spouse, and your dependents. One of the following must be true. Had to have self-employment, had to have a net profit for the year, and had to file Schedule C or F.
Yep.
You're a partner with net earnings from self-employment. Use one of the optional methods to figure your net earnings from self-employment on Schedule SE. You receive wages for the taxable year from an S Corp, in which you held more than 2% of the shares. Health insurance premiums paid or reimbursed by the S Corporation are shown in wages on W-2. So again, I have to be self-employed to get this.
You have to have a net profit.
Yeah, you have to have a net profit, including potential expense that I'm writing this off,
Yes.
because I can write my premiums off on this one as a business expense.
Basically, when you get everything in, including their health insurance deductions, they still have to show a net profit. If they don't show a net profit, after all of the expenses are in, they don't get the self-employment health insurance deductions. You have to put that on Schedule A.
That has to be related to the business. I don't get this one because I'm covered by my wife's plan at work.
No.
You
No.
don't qualify for this.
No. You have to be paying for your health insurance out of your business account. It has to be listed to the business.
Line 18, if I had a payment for early withdrawal of savings on a 1099 INT, I get to write it off here. Basically what they're saying is that I had money in a certificate of deposit, and I said I was going to leave it there for 90 days. They calculated how much interest I was going to earn in those 90 days. I took it out in 60 days. Well, what the 1099 INT does is assume that I kept it there for 90 days, reports all of that income, and then as an adjustment says, oh yeah, by the way, you took it out early, so you didn't receive this, instead of just adjusting the 1099 to begin with.
It credits you the whole 90 days of interest and then says, oh, by the way, we're keeping $30 of your $90 interest because you took it out 2/3 of the way through instead of all the way through.
Right. So they report it like you got it all, and then they fix it saying, well, but they didn't, instead of just fixing the form to begin with.
Yeah, instead of just saying you got $60.
Alimony paid. Payments for alimony under the divorce decree or separation executed after 2018 are not deductible. So one of the questions it does ask is, when was the divorce decree put into place? And if you say 2018,
I need you to tell me a date before December 31st of 2018. Because if it's after December 31st of 2018,
if it's January 1st of 2019, you don't get it.
you're done.
You don't get to write it off as an adjustment to income down. They don't have to report it as income.
They don't get to report it as a deduction.
Well, no, remember, this is a two-sided sword,
Right. The person paying the alimony doesn't get the deduction for it.
which
The
is what
person-
I said first.
Oh, okay.
And then I said,
The person getting it has to report it as income.
unless
It's after 2019.
the decree was put into place after January 1st of 2019. So I had a client who was writing this off because his decree was in 2016. He has since remarried. He does no longer have to do it. Yeah.
Well, but here's the other thing that's screwy. So let's say you get divorced in 2015, and your ex is paying you alimony, right? And you've been shacking up with a guy for 2 years. You're not married, so technically he still has to pay the alimony, but you're shacking up with him. And in 2020, he finally gets sick and tired of supporting you and your boyfriend, so he takes you to court to reduce the alimony. At that point, he can turn around and, or you can turn around and have it put into the court proceeding that he doesn't get to take it as an adjustment anymore, and you don't have to claim it as income anymore.
Because it's going to be refiled, basically.
But yeah, there's an adjustment being made. Even though it started in 2015, if you make an adjustment after 2019,
No longer
you
eligible.
can set it up so that you no longer have to claim it as income, and he can't claim it as a deduction.
Remember back in chapter 6 when we talked about IRA deductions? Because I had the client come in and this was his plan all along. He knows he owes $4,000 right now. How much money do I have to put into an IRA to make that go away?
Yes.
This is my line that I'm playing with. He knows what he's doing.
I owe $1,000. What do I need? We
How
start
much-
plugging in
You
numbers.
start plugging in numbers until you get to a number that he can live with. If it's a little positive, that's fine. If it's a little negative, it's okay. I'll cut $50. But it's smart.
It's a win-win for him. He gets a little extra added to his retirement, and he doesn't have to pay the IRS as much.
Yeah. He paid himself, not the government.
Yeah.
Remember back in chapter 10 when I said as adjustment to income, I could write off student loan interest. Well, here's your line.
Yep.
Other adjustments, 24A through 24Z. The one thing that we did talk about, so like if I had rental income, but I'm not renting at a fair market rate, then I'm limited to the amount of expenses that I have, as this is where the expenses go, up to my income, rental income. If I'm not using Schedule E, because I can't use Schedule E, because I'm not renting at fair market rates.
Right. Keep in mind, too, for student loan interest, there is a cap. Last year, I had a guy come in. Grandparents passed away. He got an inheritance. He paid off his student loans and came in with a 1098-E for $32,000 of student loan interest. And
Yeah,
was-
he only gets 25.
and was not happy when I told him he only gets a $2,500 deduction. I mean, he
32,000 to 2,500.
He's
he
capped.
got credit because he paid off his entire student loan with his inheritance from his grandparents. He got credit for $32,000 worth of student loan interest. You can only claim up to $2,500 in a tax year.
That's what I thought. Well, that's a lot of difference. It's
And then he asked the famous question, well, does the rest of it go on to next year? No.
All right, so some of the adjustments that we can do. Jury duty pay. Remember I had to report his income earlier? Well, if I brought up the exception to the rule, here's where you take the exception. My boss paid me a regular day in exchange for me turning over my jury duty pay back to him. So I recorded that I received it. Here I'm reporting that I gave it away back to the boss.
Yep.
You have to have a big understanding boss on that one.
I don't understand why you would.
Okay, so think about it. You make $15 an hour. I give you the day off. I'm your boss. I give you $15 an hour. You come to me and say, hey, Matt, tomorrow I have jury duty. I need to have some time off. So I said, not a problem, take your
How's the
day.
employer gonna claim that?
You can write it off as an expense.
I'm gonna write
A
it
whole
off.
day?
Yeah.
Yeah.
No,
But he
no. What I'm
received-
no. This is how how
Minus
it
what he
works.
received in return.
You're going to go to your jury duty, and when you come to me for the time off, I'm going to tell you, super. When you get your jury duty check, bring it in. So you go to your jury duty, you come in, you bring me your jury duty check. I have you sign the check over to me, and I give you the 8 hours from yesterday that you were off as pay. That 8 hours goes on your W-2 and gross wages. The jury duty check, I'm going to expense for giving you the day off.
See?
I'm gonna add
It's
that.
a win-win.
I'm gonna add the $20 in on income from my company, and then I'm gonna turn around and I'm gonna expense the $20 because you were at jury duty,
And he still gets to count the wages he paid.
and I still get to count your full days of wages. I still have to pay your withholdings and everything else.
Right.
But instead of getting $20 for that day,
You got 150.
yeah, you got your
You got your regular
8 hours
pay.
times $15 an hour. For sitting, twiddling your thumbs, waiting to find out if you had to go sit on a case.
24B, deductible expenses related to income reported on line 8I, or L, I should say, from the rental of personal property engaged for profit. That's your next. Non-taxable amount for the value of Olympic and Paralympic medals. Used to be, if you want a gold medal, you have to pay tax on it.
Yeah.
This is
Well, now you don't.
the stupidest thing. Whoever thought of that must have been I.
Jealous.
Thank
Yeah.
you for
Well,
representing our country.
it wasn't on the medal itself. It was more on the prize money attached to the medal. So if you wanted gold and you got $1 million check, you had to pay money on the $1 million check.
Well, that is different. Didn't want it that way.
I didn't know they got money, I thought they just got
I
the
thought
money.
they just got the medal.
The,
Well, they get-
the prize money, the
Companies
amount of prize
Yeah.
money they get is
Or
determined
endorsement.
is
Yeah.
determined from the medal that they get.
Well, it's not full,
That's why they include that's why they include the non-taxable amount of the medals. Unless they're gonna unless those medals are solid gold, and then I guess
but they're not.
All right, so 24D, we're not worried about the repayment.
what? I don't get to amortize my expenses for putting up a forest?
Good luck around here.
I plant 10 trees in my backyard, I better get something for it.
I didn't.
What makes you
Why
special?
not? You get nothing, insurance wouldn't even pay for it.
All right, here's one that you might get. 24H, attorney fees and court costs for actions involving certain unlawful discrimination claims. Now, this is
Oh.
basically more for the plaintiff rather than the defendant.
Right. Right. So you sue Liberty Tax for defamation of character or discrimination. The settlement you get,
No, the fees that I paid.
oh yeah, the fees that you paid out of your settlement to the attorney,
I get to write off.
you get to write off.
Attorney fees and court costs you paid in connection with an award from the IRS for information that you provided that helped the IRS. So, yes, the IRS is going to pay me a prize
For whistleblowing.
for whistleblowing, but then the IRS turns around and says, "Yeah, we'll also let you write it off. So we'll show that you got it, and then you won't pay any tax on it."
Can we find a few of these? 'Cause I need some.
Well, first of all, you have to have information that the IRS deems credible to start an investigation.
We honestly have one.
Housing deduction form 2555. I fill one of these out every year.
Huh?
My client in Dubai takes a foreign housing deduction.
Oh yeah.
I'm not going to go into a lot of details. If you need to know, I'll tell you.
I don't need
It's
to. I'll holler at you when the guy from Abu Dhabi comes and sees me or something. More than likely, I will just send him to you.
No, that's fine too. If a personal item was sold at a loss that was unrecorded on 8949 into the amount of sale proceeds from Form 1099K on line 24Z that was recorded on line 8C.
How often have you guys seen one of these?
Never.
Well, okay, so we had a client last year, your client, was doing what she told us at the time was babysitting.
Yeah.
She calls me back, I don't know, a couple months back, telling me that she needs to amend her return because she wasn't babysitting, she was doing foster care through DCF, and none of the money that she told us that she got is taxable. Almost $18,000 of the money she received from DCF was on a 1099K. I told her, look, it's on a 1099K. If it's on that, it's going to be considered taxable income.
Uh-huh.
On top of that, it garnered her a refund. And I told her, I said, if we were to go and take off all of your 1099K income, you're going to owe the federal government. At this point, I would leave it alone. You have income that is verified income. You've put it on a tax return. You've paid your taxes on it. You're good. There's nothing wrong here.
You're poking the bear at that point.
Yeah, at that point, if we take it off, then the IRS is going to want to know why you think you don't have to report that 1099K income from a third-party vendor.
Yeah.
And I haven't heard back from her.
Which
So-
leads you to the next line, although this wasn't the example that I was going to use. If you have a 1099K receipt that has incorrect payment amounts, you can make an adjustment to that 1099K entry here. Now, what Matt was saying is what she wanted, but my more reasonable example is remember the 1099K. The whole problem with not being put into place at the moment is because that it's having a hard time distinguishing between my actual selling activity and being reimbursed from Shannon because I bought Starbucks today.
Yeah.
If I can prove that that payment was from being reimbursed for Starbucks, there's my adjustment line.
Yeah.
And right now, the way it's set up, it's so easy to cheat.
Yeah.
It is.
All you gotta do is click family member
Right.
to Joe Blow down the street who's buying a painting.
Yeah.
Well, that and they're trying to link the 1099K to PayPal, Cash App,
Right.
Cash
Venmo.
App, now you have to put a notation of what the money being sent
Is
out
for.
is.
Yeah.
Or it won't go.
And the one thing that all of these have in common that they're doing, which I think is a good thing, is they're letting you determine what kind of account you're putting in. So
Right, but that was what I was saying.
I can go on Venmo or PayPal or Cash App and list my account as a personal account. I'll never see one of these.
Exactly, that's what I'm saying. It's so easy to cheat it.
Yeah.
But they're still working on it.
Yeah.
The IRS knows that there's a loophole here that they're trying to close.
I just
Well,
don't think
doing
they're
the
gonna be able
notation
to.
is the first part.
Yeah.
Yeah, but that's been in place for 2 years now, and
Yeah, and how many people are gonna say, oh yeah,
I've
this
never
is for
seen it.
business?
Mine just started doing.
Mine just started this
Recently.
year,
Well, yeah, this
last
Yeah.
few months.
yeah, no. That's the next step.
Right.
It's not the be all and end all step. And let me go back here because I didn't mention this, but okay, so 1099K is not an official form. I mean, it's an official form, but it's not. I like it because it's verification of income. If I'm using a Schedule C, it's my law. It's acceptable. The IRS will accept it as proof.
Yep.
But there's no place right now for the IRS, at least on the IRS side, to put in a 1099K. It doesn't really exist.
No. Typically, when we get a 1099K, especially if it's for a large amount, and somebody's doing something like landscaping
Yeah.
or something like that, you can put the 1099K in the system. You can pull up the 1099K. You can fill out everything in the system. Doesn't know where to put it. because the only spots it gives you is this is either a dead, this is an incorrect or this is a correction, and none of those apply.
Right.
We just put it in. We don't tell it where it's to flow to. We just put it in, and then typically we'll put this in under other payments on a Schedule C.
Right.
We don't put it in with gross receipts. We put it in under other payments on your Schedule C tab in the system. That way, when they go and they look and they say, "Oh, well, we've got this 1099K for 18 grand. Where the hell's it flow to?" And there's a notation on the Schedule C for 18,000 in other income or other payments, they can make the correlation.
And the other point that I was going to bring out is, and I forgot when I was talking about 2106. Remember, this class is structured to talk about stuff on the federal side because it's what it's geared to. Because talk about individual states can be tedious.
Yeah.
Oh God, yeah.
So many different rules for so many different states. But the one I will bring out is that if you're, I found out the hard way that sometimes, even though the new form 2106 isn't going to be counted on the federal side, the states not always followed suit. And I found out the hard way when I was doing an Arkansas return that Arkansas still does a
Dues? Still dues at
still
2106?
does a 2106 under the old rules. So even though I couldn't write it off on Schedule A on the federal, I certainly could write off everything that I would have been allowed to back in the day on the state side.
Schedule A is the same way, by the way. You may not be able to use those deductions on Schedule A on the federal side because you can't beat your standard deduction. But it doesn't mean that everything on that Schedule A won't be able to be used on the state side.
Right. So we fill it out anyway because
Yes.
we just don't know whether or not we're going to have enough.
Federal
Might be
may not count it, state might.
Right. Because the state doesn't have the big, huge. They still have the personal exemption and the standard deduction broken down into its component parts.
Right.
So it's easier to qualify.
Yep. If you've got $15,000 in Schedule A deductions, and you've got to beat $30,000 on the federal side, but you only have to beat 12 on the state, you just got yourself an extra $3,000 in deductions on the state side. You can't use it for federal because you couldn't beat the 30,000, but you beat the 12 at the state.
Yep. Section 2 is a two-section attachment to 1040 used to report additional taxes not entered directly on the main form. Part 1 has been updated apparently for 2024.
Huh? For what?
Didn't say exactly what. It just says compared to 23.
No, okay.
I'm not
I
seeing
don't know what
anything
they
that's
would have
really jumping
added.
out at me on that.
I was gonna say I don't know what they would have added from 23 to 24. I didn't think there was really much of anything on there.
No, there really wasn't anything new. Maybe we tightened it up and took a line off and moved it to Schedule 2.
Okay.
So here's our Schedule 2, and so let's talk about some of the things that are on it. Again, a lot of things that we're going to be talking about, we've already talked about. Excess advance premium tax credit. If I'm taking advantage of the Affordable Care Act and I got too much subsidy, it goes here. This is a tax.
Yep.
That's your prepayment of the new clean vehicle credit transfer from 9936. Yeah, that doesn't even exist anymore, so I'm
No.
not really worried about that. Repayment of previously owned clean vehicle transferred to a registered dealer. So instead of me qualifying for, or taking, I qualified for the clean vehicle credit, but instead of wanting to fill out the paperwork for it, I just told the dealer that they could take the credit for it, and they give me a discount on my price. Oh well. Never doing 1B. Not doing 1E
Mm-mm. Or 1F.
or 1F.
Probably not 1Y either.
No, not really doing anything here.
AMT.
Alternative minimum tax. This is where most of my income is not being taxed at regular tax rates. I'm taking advantage of capital gains tax rates, but I'm taking too much advantage. So the IRS has put into place that, well, if you're going to do that, we're going to make sure that you pay your fair share.
You're gonna pay something.
Yeah.
I'm married filing joint. My only income is $65,000 from capital gains. That's my only income. $65,000. It's all capital gains. That's my only income. That's taxed at 0 because I'm married filing joint.
Yeah.
So that's a 0% tax rate. The federal government's going to go, yeah. No, this is the alternative minimum tax you should have paid on $65,000,
Right.
and that's what you owe.
Right. So AMT only comes into place if you don't actually have real income.
Yeah.
This is if your income is basically all I'm oversimplifying, but basically related to unearned income for the most part.
Unearned income or non-taxable income, yeah. Which is all unearned anyway.
Line 4 is self-employment tax. Line 5 is unreported Medicare and Social Security tax. This is the Medicare and Social Security tax on tips.
No.
No?
No. This is okay. So line 5, the unreported Social Security and Medicare tax from from the forms. When you have a person who works in the service industry, say you have a bartender, okay, and the bartender's got $50,000 in income, but on his Social Security wages, it shows that he only paid $400, only had $400 and something withheld for Medicare wages. In box 12, code A, I believe, box 12 code, it'll be that code and then there'll be a number on there. And it'll say like 2780. That's the employer reporting the amount of Medicare tax that was not withheld from the employee. That is what goes there and gets tacked onto his return as a tax because it's not been paid yet. He is still responsible for paying his portion of the Medicare tax that the employer did not withhold. That's where that goes. Or uncollected, sorry, that's line 6. Uncollected, yeah.
Uncollected. Unreported is the tips.
That's what it says on here.
47 or 4197.
4137?
Yeah. 4137. That's tips.
That's
Chapter
the
4.
tips. Okay.
I was right.
Yeah, you were right, I
Thank
just got
you.
a line ahead, sorry.
Yeah, so shut it.
All right.
So now we had 6 explained to us because they were being treated as an independent contractor by the employee not holding Social Security and Medicare tax bases on compensation earned. 8819. $89.19. I said 88. I'm good at that. Don't use this if you were performing as an independent contractor.
Yes.
And instead, just use Schedule C and use the self-employment tax.
Yeah. Yeah, the 8919, that
This is where I'm saying that I'm telling the IRS that although I'm being reported as an independent contractor, I shouldn't have been. Is one way.
is one way.
Is
Yeah.
one way.
Yeah. But the one that I'm thinking, I had
Yeah,
a guy
you-
come in from
yeah.
Old Chicago.
Right.
He works at Old Chicago, and when he came in, I was looking, and I mean, it said that he had $52,000 in Medicare wages, but he only had like $400 withheld, and I'm like, well, that's way low.
Yeah.
But then in box 12, and it was the same way for his Social Security. Social
Uh-huh.
Security and Medicare were not correct
Right.
by any means. And in box 12, there were 2 codes with 2 sets of numbers, and what those numbers were were the difference between what was reported as being withheld
And
and what should have been reported as being withheld. Those numbers got tacked on to his return
Why
as a,
didn't they withhold it?
there is a special form you can fill out that where you might be exempt on other rules.
because I when he brought it in originally, I handed it back to him and told him to go tell his employer he needed a corrected corrected W-2. This W-2 was incorrect, and they wouldn't do it. So I started researching the codes in Box 12, and that's when I realized that the two codes in Box 12 were for the uncollected portions of Social Security and Medicare.
Yeah. So he was still responsible for it, but they weren't withholding. And like I said, there's a special form they can fill out, but you're still going to be left on the hook
Yeah.
if it doesn't pan out. Line 8, additional tax on IRAs or other qualified retirement plans, tax favored account 5329. This could be one of three things. This could be the 10% early withdrawal penalty. This could be the 6% excise tax for over contributing, or the 50% RMD tax for not taking enough out.
Yep.
All three of those things show up on this line. Also, another thing that shows up on this line would be, I took money out of a Coverdell education savings account, but I didn't take it out for the right reason.
Yes, you
Sure I did.
That's why I have a new Corvette and
So refer to chapter 6 if you need to. We even looked at it back in chapter 6. This is a catch-all for these special types of taxes on these tax-favored accounts.
Yeah.
Because remember, I had an over-contribution limit on the education savings accounts too.
Yep.
And if we put in too much, here's where it flows to.
Yep.
That's here. Schedule 8 for household employee taxes. Well, I'm not worried about that because,
you'll never see it.
yeah.
We don't have the clients that have
Maids,
maids and butlers and
drivers
nannies and
Chauffeurs
chauffeurs.
The
That's
yard.
not drivers.
Yeah.
Isn't that under the title of grandma?
For most of our clients, yes.
When Brooklyn calls, yep.
Me too. See ya.
This form is thankfully about ready to expire. Repayment of the first-time homebuyer credit.
Oh, yes.
In one particular year, 2008, instead of getting a across-the-board first-time homebuyer credit that you didn't have to do anything with, for 2008 you got screwed. You had to pay it back a little bit at a time.
This year's the last year
I
for
think
it,
it's
isn't
the
it?
last year.
I've only seen it once.
Oh, I've seen it a few times. I've had it reject for it.
Yep, me too.
Me too. The Mickeys,
That's probably the one I've seen.
Mr. Mickey. He came in to file with us, and I filed his taxes. It rejected back saying he needed a first-time homebuyer credit, and he looked at me and said, "What the hell is that?" And he came to us because the guy that he had been going to for the last 15 years
Haven't been doing it.
had passed away, so he needed a new tax preparer. So he came here. I did his stuff up. It rejected back for the first-time homebuyer credit. And I asked him about it. And he goes, "I don't know." So I had him bring me his return, and I looked through everything, and
There it was.
no,
It wasn't.
it wasn't.
How did he get it through?
What I asked him, I said, "Well, it rejected back because it's not on here, but it's not on your last year's return that your old guy did." And he's like, "Yeah, he just did everything up, had us sign it, and put it in the mail for us."
Oh.
Paper file.
And I was like, "Oh, okay." So and our system has the tools. We can go back in and look and see. And
Yeah.
I got him restarted on all of that.
Yeah, you can make up for it and catch him back up.
Yeah. I got him restarted on all of that. He was not happy with his old guy. Well, he was supposed to be paying it back, and he hadn't been. And I think the guy was.
I'm surprised he didn't get it right about from the IRS.
For 15 years worth.
Well, maybe not saying that he didn't, he just didn't know what it was.
Or his tax guy said, "Oh no, it isn't
Or
don't worry about
he
it."
took it to his tax guy, and his tax guy said, "Don't worry about it, I'll
Yeah,
take
that's
care of
I just
it."
said.
Quit repeating.
I'm sorry,
You're not a repeat bird. Be quiet.
Harry.
Line
Today
11,
I'm a
taxes from 89.59. This is if I make so much money, and there's actually a tack on to that. Let's see here. Additional Medicare tax applies to Medicare wages, the Railroad Retirement Act compensation, and self-employment income above a threshold amount. The threshold are based on your filing statuses, so there's a little premium for making more money. They bump up your Medicare tax. You rich person, you.
Well, it's the one tax that doesn't cap out.
Yeah, as opposed to Social Security tax that does.
Yeah.
So, line 12, net investment income tax. Net investment income tax may be owed if your total 24 AGI is more than those threshold amounts.
I like how it just assumes if you're married filing joint and you have a income of more than $250,000 that you're automatically investing.
Yes. Yeah, but this is irrelevant of whether you're actually investing or not. They're just assuming that you are.
Yeah.
Let's see here. So 13 through 16 are incredibly rare. They don't even want to cover it, and then they put it up there. Uncollected Social Security tax, interest on tax deal installment income from the sale of certain residential lots, interest on deferred tax gain from certain installment sales, low capture of the recredit housing. Okay, yeah, no. Not worried about any of that for our type of clientele.
Yeah.
Schedule 3, two-part form used to report non-refundable credits and other payments like child tax credit or the other dependents credit. We're feeding in this section of our 1040 from Schedule 3, either above the line or below it. Reminding ourselves that all the taxes that we just talked about can't be paid with all the non-refundable credits that we're going to review now. Can't pay those special taxes with non-refundable credits.
But you can with payments.
Yes. So Schedule 3, Part 1, Line 1 is Form 1116 for foreign tax credit. 2 is our child dependent care credit, 2441 for our babysitter, or for daycare, really. It's really for daycare.
Yeah. It's the adjustment that the parents get on their tax return for paying for daycare.
8863, the non-refundable part of education credits, whether it be all of the lifetime learning credit or part of the
AOTC.
the American Opportunity Tax Credit. Line 4, retirement savings contribution credit, 8880. This is if I'm working at a low income position but still managing to put money into a retirement account, I get a little bit of a non-refundable tax credit.
You'll get this pop-up when you're putting in all of your W-2s. You'll get this pop-up if they have code D in box 12. It'll pop this up and say, hey, you need an 8880. And all they're wanting to know on the 8880 is whether or not they took out money from their retirement accounts that previous year.
Right.
Or for the year that you're doing. If they don't have a 1099-R, you can probably put down 00
And go on.
and go on about your way.
Because if you put down any number, then they don't qualify for the credit.
Right.
Because obviously, I shouldn't get credit for putting into a retirement savings account that I'm draining. Let's see here, residential clean energy credit. We talked about on Chapter 11.
That goes away this year.
Energy efficient home improvement credit, Chapter 11. That's also on
Going
its
away
way.
this year.
Some other non-refundable credits that you're not going to see very much. General business credit.
No.
We talked about on Chapter 11. Credit for prior year alternative minimum tax. So last year I got hit with alternative minimum tax, but this year I actually have some real income to go along with my Investment income, I might qualify for some credit to get it back. Some of it, not all of it. Adoption credit, credit for being working and being old. And the clean vehicle credit and our notorious line reserved for future use. Whatever that might be. Mortgage interest credit, which really doesn't apply to us, that's kind of a District of Columbia thing.
Mortgage interest is a District of Columbia thing?
There, well, remember, I'm writing this off on Schedule A, but there is a District of Columbia, which is federal territory.
Right. Okay.
Because all the big wigs live there and they want all the tax credits they can get.
Speaking of District of Columbia affairs, or first-time homebuyer credit,
Now, does that mean a first-time home buyer in the District of Columbia or a first-time home buyer, period?
in the district. Again, federal territory. This is the only place where they can get it. Alternative fuel, tax credit bonds, previously owned, clean vehicles. Yeah,
So I become a representative, go to D.C.,
buy a house.
buy a condo, tell them it's my primary residence.
Which makes you ineligible to represent where you're back from.
Well, no, that's the way it's done. It's my primary residence, so I get the prime interest rate for D.C. instead of the prime interest rate in Kansas. There's a few people that are in trouble for that one.
That's here. Now we're on to some refundable credits, net premium tax credits. So I'm on the Affordable Care Act, and I didn't get enough subsidy. So I get it in the form of a refundable credit.
Yep.
Line 10, the amount that I paid when I filed an extension. I knew I was going to owe, so I sent in $5,000 or $10,000 or $100. I don't care, whatever it was. That number shows up here. When I go to file your taxes, it's treated like a prepayment.
Yep.
Nobody ever does this, except for
Why?
Matt.
My car dealer.
Oh, okay.
My car dealer, every year when he comes in on the 15th, he files an extension, and he tells me amount to put down on the extension that he's paying with the extension. I process his extension, I give him his voucher, he drops it in an envelope with a check and mails it off.
Which is what should happen.
And then when he comes back in October to finish his return,
He's got a credit.
it automatically puts that he paid X amount of dollars with his extension.
And we'll talk about that a little bit more when we talk about extension next week.
Monday.
Is it Monday? I wasn't committing to Monday.
I was thinking
I think it's
probably
Monday, but
be
I wasn't
Monday.
committing. It could be Wednesday, but I don't think it is.
I say usually 19 and 20 are the due diligence,
Well,
hardcore.
20 is due diligence. I can't remember what 19 is specifically. So we'll come back to that. Remember when we were talking about there's a cap on Social Security payments, and if I work for two different places, neither one of them actually can keep track of how much I've already paid, and so I get it back as a refundable tax credit. Again, I'm only filling this out if I work for multiple employers or one employer and was self-employed and paid self-employment tax.
Mm-hmm.
If I just work for one person, that guy needs to go back and get his W-2 fixed.
Yeah,
They
my,
should have known better.
yeah. If I got $200,000 in gross wages from my employer, and I've got $14,000 withheld for Social Security, the employer has to go back and fix it. But if I work for three employers, and I have a total of $15,000 between the three withheld for Social Security, then I can get it back.
Line 12, credit for federal tax on fuels that I shouldn't have paid. We talked about this one actually also.
Yeah.
Filled the John Deere tractor up at Quick Trip with diesel. I paid tax that I didn't need to pay. So I'll keep my receipt, write it off, get it as a refundable credit.
Pulled the combine in at Cenex.
Yeah.
Bye-bye.
Oh.
Filled it. I was just thinking the same thing.
You got that header past those pumps, man. I don't know. You're skillful.
Ah, back then.
You lower your tires. Go to the flat.
If you're involved in a real estate investment company or a real estate investment trust and get this form, it's a tax credit, and this is where it goes.
Yeah.
Is your credit for repayments amount included in income from earlier years? Elective payment election on 3,800, deferred amount of tax liability. Really not a lot going down here.
No, we won't see any
You
of
won't
that.
see any of this. Hey, they got it.
Yeah. Yeah, Schedule 3,
There's not much to it. So, we have an extra 10 minutes. I'll make you fill out these questions.
That used before.
Well, they might help you when you take the Liberty Tax exam.
what?
Those might be the questions that
Well, except for you guys said that the schedules might be different or not used at all.
Well, so when we went over Schedule 1 and Shane was going through the lines, they didn't, because they're using last year's, they didn't have the line on there where we need to put 3 different things that are supposed to be on there this year. Overtime pay, tips, and the senior credit.
Because you're a little toasty and because it's a little stuffy.
No.
So on Schedule 1, which is your
That's not
adjustments to
it.
income,
And so we told you on
the amount of overtime pay that each person collected, you know, the total amount of overtime pay or the total amount of tips or the
that.
senior
No.
deductions, that's where that's the schedule that those 3 things are going to go on to adjust pay.
I didn't get my coffee.
You know, instead, because they've already said they're not going to run it this year as a box 12 item. I'm going to assume that next year, for tax year 2026,
No, my Starbucks.
it may show up.
It was horrible.
It may show up as
I heard
a
you
box
say that.
12
And I
item
gave it
with a
to
box
Matt.
12
Matt-
code on it.
Matt told me. He
Well,
went
it-
back, so.
They're not changing
And that's
anything
the-
this year
jamming
because
on me back
it
there.
got jammed in the last half of the year.
Also.
They'll have a whole year to go in and revamp
Well,
the
notice
document,
that sometimes
revamp
if
the
you-
program for it.
Have to fix it
So for
a
this
jam or
year,
something.
they're
It's making
saying
it weird.
employers separate out their overtime, separate out their taxes.
Usually.
Seniors 65 and over, go to Schedule 1 and put in on this line the senior tax credit. And that way you'll automatically go to Schedule 1, you'll put that
My
in.
guy that dropped off
What's
yesterday,
the difference between
I put that in the last of his stuff
the
today.
SR
I told
The
him,
senior,
okay, number one, this
That
one
one's
has
the
to
eight.
be to
65.
the IRS by the 7th.
65.
And
So
it's-
if,
it's-
if,
it's not-
and it's just an easy way for the IRS to
And I
understand
explained to
why
him, you know,
married filing joint on a
because,
1040,
it goes down to
instead of it being
It's so old.
$30,000 for a standard
It's gotta go
deduction,
by paper.
why
I
a
said, so we
couple
actually have
doing
until
married filing joint
4 o'clock
gets
on Friday.
$35,000 for their standard
Because I want to
deduction.
give them
Because it's
an
1040
hour to do
SR, they
whatever they need to
automatically
do
they
get it to
click
the
in the additional $1,500 or $1,600 and each one of them get added to the
And I said,
standard
you know,
deduction.
I'm
Otherwise,
I'm
if it's just a
I'm
1040,
willing to come in. You know,
you
if
know,
you wanna go by
if
Thursday
the
night,
forms
you call
weren't
me,
different
Scott,
because of
so-
age and it was
Just would you call me?
$35,000 standard
We
deduction
schedule
just
it.
on the 1040, they're going to
And
start
just
looking
let
to see what's on Schedule A because they're going to assume it's an itemized deduction. But if it's on the SR, they don't have to worry about the itemized deduction.
I really wanted her to show up.
The
So you-
first time she didn't make it even part way. Well,
No,
that
she
wasn't
missed a
right.
lot of.
No, she misses a lot of classes.
But she's also at physical therapy every day.
What
And
does that happen to?
I don't know. But I think, honestly, I think she's taken this class more for
She said that too. Yeah, it's just for knowledge.
Yeah, I think this is more for her, so she can just go right on to IRS and do the direct file on IRS.
If it's still there or not.
I don't think so, because she's my client.
Oh, okay.
I think she's just wanting, because we had some issues last year, and I told her, I said, if you wanna learn more, come to class. And
Yeah,
I
it's
think
like,
that's what she did.
it's like Letitia a couple years ago. She just took it because she wanted general knowledge to help her in her with her bookkeeping on her daycare. So
But
she
you
only
like-
really took it for Schedule C, but she took all the classes up to that because she wanted to know those too.
But you're glad to select Joe stop.
That was a different.
I hated coming in when you had that. And it wasn't because we had it.
I know the business.
You what?
I didn't know, having to deal with certain people that had to come and get that.
It wasn't the people that came and got it. It was the person that was running it. I couldn't stand her. I didn't want to talk to her. There was just something about her I did not trust or like.
Well, and there was no support from Select Code.
Yeah.
Amy's still there, or, excuse me, not Amy, Tina's still there.
Good for her, but she's at an actual store.
Yeah.
That's different.
Now, she ended up adopting the girl that was running that store and her daughter, and now they consider each other family, which is a fine, because we all do too.
Well, see, and the other thing is this particular person I'm talking about, and Shane knows it is. I found out some things.
She the one that was helping Brenda?
Uh-huh.
And Brenda found out some things too.
I found out that she used to be a home health worker, and that she was stealing from her clients.
Oh, right.
And I was kind of worried when she started conveniently helping Brenda.
Oh, I understand that.
Unfortunately, Brenda has nothing.
Exactly, because
Right.
right before she moved out of where she was into the new spot, Ron and I had to go help straighten a few things out of her spot.
Well, she's fixing to move again.
Who is?
Brenda.
She didn't say anything to me.
So she's staying at the same facility.
Right.
She's just getting a new apartment. Yeah,
Okay.
because they're evidently they're going through and they're refurbishing everything. But they've built on a new set of apartments, and then they're going to move people out of their existing apartments into the new one, refurbish, and they're just going to hopscotch it around.
Yeah, so she won't go back, she'll stay where they move her.
Right,
Okay. yeah,
right.
that's-
So she'll move from her apartment that she's currently at to a new apartment, same facility.
Yeah, no, Monday, when I was driving back here from dealing with Stupid over there, I was walking out the front door and my phone rings and I look and it was Brenda. And she goes, hey. I said, what's going on? She said, happy birthday. And I said, Brenda,
It's your birthday, not mine.
mine's out for another 2 weeks. She's like, I know, but she goes, I did not recognize your number when it came through. I gotta take this.
Because she hasn't had it.
No, because it wasn't on her phone anymore.
Right.
She got a new phone.
She got a new phone and not everything transferred.
Okay,
Oh,
you're gonna have to call me back on a better line.
but she doesn't have fun.
Yes.
Well, you just send her a text and say who you
Yeah.
are, she can add it. But
Yeah. I don't know then if she's got any, I can't call her.
she doesn't have a new phone. She has the same old number.
Oh, okay.
All right.
Wait,
I'll save you that.
I feel like I freaking worked out.
Trying to get them records.
I left
Ah.
my starter.
All right. Which form is used to report additional income such as unemployment, compensations, prize or award money, and gambling winnings?
Schedule A.
Yeah, Schedule 1. Not Schedule A.
Go to work.
Where would you report student
You're
loan
fired.
interest deduction? Schedule 1. You add 2, you subtract. Which schedule should be used to report self-employment tax?
Schedule 1.
Schedule 2. Note 1.
Note 2.
2. Yeah.
Schedule 2.
You got me questioning, but Schedule 1 is the adjustment.
Yeah, Schedule 1's the adjustment for half. Yeah.
Yeah, you got
The
me
actual
questioning.
tax is on 2.
Yes. Again, read the question. Matt did not read the question.
No, I heard self-employment tax and went Schedule 1.
Where would you report the additional tax on IRAs or other qualified retirement plans?
Schedule 2.
Schedule 2, because it has to do with taxes. Which form is used to claim the foreign tax credit?
Schedule
Schedule
3.
Oh, 3. Yep, those are tax credits. My bad.
Schedule 1 is adjustments. Schedule 2 is
is
taxes,
taxes,
and Schedule
Schedule
3
3 is
is
credits.
credits or payments.
Where would you report educator expenses?
Schedule.
Schedule 1. What schedule should be used to report household employment tax? I don't even know why they asked this bloody
2.
question. 2. We're doing taxes for 2 decades now. I've not filled out this form ever. Where would you report an amount paid with a request for an extension?
It's 3.
That's 3. Which form is used to claim the general business credit?
3, isn't it?
That's also 3.
Though I've never used Form 3800.
Where would you report excess Social Security taxes withheld? It's also Schedule 3 thing. Did I skip 9? Which form is used to claim the general business credit?
Nope, that's Schedule 3.
Schedule 3.
Form 3800.
And then 10 is
3.
3. All right, so next time we'll cover 2 chapters, and one of them has to do with Schedule C stuff that we haven't talked about yet.
Really? What's Schedule C stuff?
We haven't talked about travel and meals.
We have, but not in depth.
Yeah, not as the actual subject of it.
Well, that ought to cover business entertainment expenses too, then, huh?
Yes.
Yeah.
So we still have some fun coming up. We haven't finished everything yet.
Yep.